This region around the Great Lakes has been called a heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Managed money piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sideline.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. Happy Halloween. It's Friday, October 31st, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, December corn down 2.5 at 427 3/4. November beans were down 4 1/4 at 1087, and December Chicago wheat was down 6 at 518 1/4. Government still shut down. We still got no export sales announcements. We are through 22 of 23 settlements for the harvest price discovery period. Corn is currently at 422. Soybeans are at 1032. We'll get our final settlement here today. And then RMA should be out on early next week with the final numbers there. So with that, stories out this morning that we got 4 more Chinese bean purchases, 4 more cargoes that was out here this morning. So that's in addition to the 3 that they purchased before the meeting. So seeing a little bit of business pop up there. I know basis in the PNW has popped a little bit to signaling that business is getting done. Also, we're coming into first notice day for November futures, so it'll be interesting to see where we go off here today. With that, oh man, this is a funny deal. Dustin, I know you had a couple things you wanted to talk about here this morning, and then we'll throw around the room.
Yeah, Dan, I just love that you did not acknowledge that you're wearing Oscar the Grouch.
I couldn't look at the screen.
So if I got a couple charts. So we talked yesterday about this news that China will be buying and trying to make up lost ground. Right, we've already missed a big part of their window, and this is a chart of the price of January beans versus the price of March beans as a spread. So you can see back in August, we were kind of at the lows. We had 0 purchases from China going into the new crop year. And it was pretty clear that they were kind of leveraging that as a bargaining chip. So the expectation was that we were going to have a crappy export season and a big crop. And now we have China, right? So we're starting to see this turn up, and we also have news that we want them to make up lost ground by January, 12 million metric tons in a very short period of time. So this is, I think this chart makes the most sense out of all the price action. Is that like the need to source beans after they've been locked away in the bin is high, and I think that if China continues to show sales like they're just starting to trickle in, I mean, we're going to see millions of bushels here shortly if they follow through. This chart makes sense that they're trying to source that. The other chart I want to put up here too is the actual river level. So river levels were at -9 just a week and a half ago, and recent rains have certainly improved that quite a bit. So we're coming out of that low territory. So it's really kind of good timing for all of this. My expectation is if China follows through, that spread could continue to get interesting.
So Justin, we've obviously we had a couple of trading sessions there, night session and day session after everything that was announced and discussed on the trade truce and whatnot. I guess what anything that swayed your opinion, or what are your thoughts as you've dug deeper into everything?
Yeah, I mean, I think yesterday we talked about it pretty well. Yeah, we'll take it, right? But if you look at it, I think as you dive into it, I think the government and the current USDA estimates for exports were relying on purchases like this. So the big question is whether they buy 12 million tons or they buy more. So 12 million tons on its own for the marketing year isn't going to be enough to hit the number. I mean, I think if you look at other buyers besides China, they still have to buy a significant amount. And when let's say that we force, all China business comes to US and Brazil basis, falls apart, which it already has begun to do that, our basis goes up, their basis goes down, right? You're forcing the buyer to come to here. Then, rest of the world goes to Brazil. So I don't think it's, I get the optimism. We're breaking out of 15-month ranges, so I certainly don't want to be short as a spec at all. But fundamentally, I don't think it makes a tight soybean market personally. I don't want to be a Debbie Downer unless the yield is significantly lower. If it's off by a couple bushels nationally, then it gets exciting. And again, we're coming from such a dismal outlook for exports. So a lot of optimism right now, and I get it. I'm just saying that I think as I dig into the balance sheet, I'm not sure it's super tight or anything like that. I think it's more of a momentum trade, technical trade. We're going from the funds being big shorts to probably long now. So let's go. I mean, I hope we have some good rallies and get farmers in good positions. And there's a lot of growers that we have that have really good yields or even record yields in some cases. And this has been a great rally to do something on. So I'm hoping it continues. I'd like to start looking at new crop stuff. You look at 460 corn, 1090 beans. With APH yields, it's not exciting yet. So I'm hoping the back end gets some kind of rally into the new year or beyond. I'm hoping that we do see a lot of purchases, and it makes the forward fundamentals look much better, and we get some excitement going into spring would be ideal. So I'm a cheerleader, but I just as a pragmatic looking at I'm not sure it's we're running out of beans scenario.
Yeah, you get some kind of a 5 in front of like these 26 corn, and now you're well, because now you're talking about the guys that'll go plant corn again, and we'll be arguing about that.
Yeah, I will say that it's fine. We're flipping. Funds are probably flipping from short to long. You're getting all the technicals turning up. If we can get D's corn over 440, you'd have kind of a similar attitude in corn probably. But the farmer is a massive long right now. I think any selling that's happened, or a lot of the selling that's happened, has been on basis only contracts. Getting 70% the value of the contract, paying some bills. Definitely a bullish sentiment out there. So I do want to keep that in the back of my mind too. I think you got to reward. You get a breakout, and you get funds to flip from short to long, and you get to 6-12 month highs, things like that. I think you've got to sell it. Or at least get aggressive on getting a aggressive downside protection.
Yeah, and the ultimate theme that we always preach, right? Balance and keeping your head on straight and not getting caught up in the noise. I mean, we still got to look at profitability, and we've had a windfall by most accounts in the last 30 days.
It's been great. And look, it's one thing when you say I can't sell because I don't know what my yield is, right? When you're March, April, May, and you rely on crop insurance, for example. Well, crop insurance expired. Now you know your yield. So now it's just a matter of that's when you know how many bushels you have. It's just a matter of how much risk you want to take on. So you can't just blame it on if it goes, back down to lows. You can't blame it on never had a chance, or I couldn't sell it because of XYZ. And like we've preached this. The biggest risk is from November 1st to March 15th, when you have no crop insurance for most people. So I enjoy the rally. Hope it continues, but I'm trying to be, like I said, pragmatic on what it really means fundamentally.
Dustin, you want to add? I thought you had something to add there as well.
No, I had a thought. I think I lost it, but I think it's the costumes, but
oh, it's bizarre. Every time I look up,
this coffee slips out of these stupid gloves. I can't feel a thing. It's silk.
Yeah, no, I think we had this in the letter last night. We talked about non-Chinese buyers. I think the question I still have is like, all we have is just these kind of announcements that don't, like, I'd like to discuss what that really means. 12 million by January, 25 million per annual after that. Are we talking marketing years, calendar years? These are minimum contracts, minimum. So like, we assume that China is in, and it's a free market, but like, what is if if the other buyers are having to compete with China for the next 3 months, they're probably, not going to be as aggressive. For us to meet the USDA's current export obligation, like as we said yesterday, other buyers have to buy almost 23 million metric tons of beans.
From here on out.
Yeah,
not total. From here on out, on top of what they've already bought.
On top of what they've already bought, exactly. And it's really is not something we haven't seen before, really. So there's an uphill battle if China is only buying something just to fulfill a little obligation, and then that's it. Then the market kind of makes sense that it's stalled out a little bit here.
Well, you and I were talking about this last night, Dustin, but my take is the way that they think, I'm not sure they know what a marketing year is. So it would make sense that the way that they structure is, by 12 million tons by January, that would be 1 year of Trump, right? That'd be, in their mind, Trump's first year. And then every calendar year after that, right, January starting, would be his presidency, right? So my guess is it's calendar year or January to January.
Then we probably make it. Like we probably hit it. Then. Yeah, that would be more friendly, right?
That'd be more friendly if it's that. And you don't know. Also, it doesn't say shipped, right? So go get excited and like go invert a bunch of things. Like, can they go buy, new crop beans or even 2 years out forward? I doubt all those details have been. I think it's just buy it. I don't care what you buy. So,
yeah.
Like I said, it's certainly, you're coming from a very low spot, and I think the market, definitely in the USDA numbers was factoring in China buying a decent amount of beans, right? I mean, if you took China completely out, you would have had export forecasts down 400, 500 million bushels at least. So I think it's important, like the numbers don't factor in no China business. And now we're just going to add 440 million new bushels to demand that wasn't factored in. So,
yeah, that's a good point. Ben, the King, want to put a wrap on the grain side.
Yeah, it's been a volatile week, been a lot of fun. Bean market has been good. I thought they got a little bit aggressive yesterday in bull spreads. Justin's mentioned this before. That tends to be a vessel for people to trade beans, and they got pretty aggressive. Not surprised that things are relaxing a little bit this morning. Deliveries are upon us here, and kind of get through this and see where we go with soybeans. I think the interesting thing when we're out of getting the typical news flow that we see is what's going on in the cash markets, and pretty strong basis appreciation already in the East. River levels jumped again. Seeing plus 12 for December delivery, and they're trading this, and they're doing this on the physical level. And if you're a grower and you get that late in your contract, the starting point to move those bushels is the carry from East to March, because you ask yourself, why would I care? Why would I sell those now? Where am I going to make up for it? And it's going to have to be the basis carrot in order to move those bushels, especially in that time frame. And they also have to look and see what's my replacement value. And I think they're trading on a lot of unknowns right now. But the simple message is that we're doing business, and they're trying to get themselves covered. And it's probably a little bit more challenging here as you get to the tail end of harvest. The grower is probably encouraged for price appreciation, and the bin doors are closing. So watch that to see if some of the, a little bit more of the lifting comes out of basis, especially for corn right now. But yeah, those are all positive developments. I think we went from, let's call it 25 to 35 under in corn in the Eastern Corn Belt against the D's to some river bids that were floated my way this morning that were 12 over for December delivery. So we're doing business. No one has any idea how much, other than watching basis go up and seeing how hard it is for them to secure their needs. So, the sales will pick up eventually, and inspections, we'll see them there. But gauging how aggressive that's been, I think, will be a little bit challenging until we get a big data dump. So corn's going to be a slog on the board for a little bit. tremendous amount of volumes traded at 18.5. And on the longer terms, a tremendous amount of volumes traded, call it 36 to 38. So I think that probably catches a lot of it right now. But the one thing about corn is I feel like we're starting to ratchet up the ranges a little bit, ever so slightly. But you got to get through first notice day, and that could be. I think it's going to be a great opportunity if they really try to pound corn, because we're doing a ton of business in the bean business. We did supply ration by growing a lot more or a lot less soybeans than we have previous couple of years. So hopefully that helps us out, and we get in a window here where we can see something exciting, not just for this year, but also for 26 crops.
Yeah, just
on
to
a
add to that
side note, go ahead.
I'm just going to add that you made a really good point right there. One thing when we talk about, okay, 25 million tons a year after this year just kind of puts them back to where they kind of were, or kind of normal. You got to realize though that this year we're 6 to 10 million acres less of beans than normal. So I think that kind of goes into the story of like a rebalance of corn and bean acres. By having that in there, you need to get back closer to 86 million acres of beans going forward, not 80.
Well, and let's not minimize the fact that we had two massive crops in corn back to back, right? Massive crops. And you start to get into we're soybean planting is moving along in South America. We're putting a crop in the ground. That's that story is yet to be written, and you're going to need some big corn crops coming along to continue to keep it elevated, because corn demand has been very good. So on a side note, I didn't just choose this costume. This costume chose me. I am related to Elvis Presley.
Yes,
my
he
grandmother
is.
and his mother were cousins. So pretty exciting way to take a tribute to Uncle Lee.
Uncle Eli. Real quick, we got a great comment I think you guys will appreciate. Jonathan comes to us and says, we all used to hate wheat. Do you still hate wheat, or has the bounce made you fall in love? It's a loaded question. Who still hates wheat? Raise your hand.
Yeah, I was gonna dress up as like a really crazy person and call myself a wheat trader today.
Ben, why don't you just give Jonathan a little? What do you think?
It went right to where it had a chance at the 200-day and had a miserable failure. There's, all of a sudden in the last few months, global wheat balance sheets have, I'm not going to use the word ballooned, but they have definitely grown, and it's going to make rallies there tough for a little while. It's just the market sucks, right? I can't come up with a better term for it. The one thing that wheat has going for it is that the global short position, U.S. Matif, is humongous. And if you gave them a geopolitical reason, something bigger, wheat could really have an exit issue. But fundamentally behind it, it doesn't appear that without that, there's not a lot of reason to have a lot of hope other than, like we just saw 45 cent bounce off the lows. I was disappointed.
It's just hard. We're just the residual supplier of wheat in the world. It's hard to get out of that. I don't know.
I was really disappointed that we didn't see anything about corn and wheat from the trade deal. Those are markets that, they both could really use it. And it's frustrating that we didn't get something there, but maybe we can work our way into that. I don't know why you stop negotiating on that and just make it, bean and sorghum type of deal for ag, at least in the grains. So the short
beans was the political football, right? That was the political. That's where every reporter found some farmer to whine about beans or put them on the news. So that's what they attacked.
And the frustrating thing about wheat is it's as bearish, I guess, on paper globally now as it's been in a couple of years. And we're not going to get VSR to trigger, which would at least help, I would think, help us on the back end to try to get some hedging for next year if we could see those spreads get a little bit wider. But it's just the short. You got to hope that at some point that short gets the knife put to its throat.
Yeah, usually it feels like wheat gets the once every year massive short cover rally that you just have to sell. And it's kind of one of those markets that all of a sudden out of nowhere it rallies $1.50, and then that's it for the next 12 months.
Yeah,
and
I
start selling again.
I thought that we might see a wheat rally in the fall because we planted so much corn, and your typical rotations would be bean wheat. That maybe we need to incent it a little bit, but it has been anything but.
Very good. We got Ryland real quick here. We'll wrap up livestock. We continue to see open interest decline in the fats and feeders. Hogs has been pretty two-sided for this week. So why don't you screw worm fly? Why don't you wrap us up here?
Yeah, well, I mean, it's been a wild week, no question about it. I mean, it's just massive liquidation. I mean, you've got the market really concerned. I mean, overall, we did see some cash trade kind of really weak at the beginning of the week and then get up to 235 and a half in the South. So, like, this is actually pretty good news. I think that they were holding together okay. On the other hand, beef market finally started to see some weakness. So I think you've got a really cautious trade here. And apparently Mexico and the USDA are still going to have another meeting about the border reopening on Monday. I didn't really see a lot of details on that, but overall, I mean, like, this is going to be the talking
Why are your eyeballs not level? I can't get over it.
What are you talking about?
Your face is crooked.
Is it? It's probably because of the headset. I've got the headset on underneath here, and there is absolutely no ventilation. So, like, these things are fogged up so much I can't see anything. So,
sorry.
No, you're good. Yeah. So, anywho, I think we got a really cautious trade going forward. So, I think it's just, we put it out in the letter. Like, this is one of those markets you just kind of have to have a little bit of extra layer of protection because who knows what's coming down the road. And obviously, it just kind of illustrated how high price we are and have been. And if something does change, if there's a timeline for the border, there could be more liquidation, more downside risk. So, hopefully we see a little bit more of a flatline trade until we know more. But otherwise, it does feel like it's kind of risk off for the interim. And hog side of things, still can't quite get a bounce here. It just keeps on drifting lower. We've got a cash led, or at least a futures leading cash lower here. Did see carcass kind of level out a little bit, but it just, the market's deeply oversold, kind of waiting to see if we could actually get a recovery bounce. But right now, it just doesn't seem like there's any real optimism here. The managed monies is probably at this point, flat, if not getting to that point. Doesn't feel like they want to build a short down here, but we just haven't had commitment of traders for weeks. So, we'll see what happens. Otherwise, it just kind of feels like it's still kind of a weak market here, and just waiting for a recovery bounce in the hogs.
Thanks.
You're welcome.
I think you got to start wearing that every day.
I mean, I'm dying here right now.
Until we fix screwworm, that has to be the costume, because that is.
Every morning. That would be awful.
Okay, we made it. Bri, what do you got for us? It is Fun Fact Friday, so this will be interesting.
I think he passed out.
I think he's dead.
Oh, sorry. I was just thinking about Jamie Lee Curtis there for a second. Sorry about that. I usually don't wear this when I go out, but I can't see my notes without them. Happy Halloween, everybody. Americans will purchase over 600 pounds of candy this Halloween. With that being said,
he's fucking up.
Halloween is the second biggest holiday in the United States. $10 billion a year on costumes, candy, and decorations. Candy corn was originally called chicken feed with a rooster on the back. Their slogan was something worth crowing about. Still 35 million pounds are sold every year. Average kid eats about 3.4 pounds of candy on Halloween. That equals about 140 fun-sized candy bars. Speaking of fun-sized candy bars, they were deliberately made to make them smaller to make adults feel not so guilty eating them. Snickers is the #1 candy eaten in the United States. So speaking of Snickers, when you guys are going in your kids' trick-or-treater bags, which is the candy that you're searching? I'll go first. I'm going with 100 grand. Dan, what is you?
Twix.
Justin?
Peanut butter cups.
Ooh.
Jason?
Yeah, Snickers.
Dustin?
Reese's.
Ben?
Okay.
Ryland?
Take 5.
Of
Take
course.
5. What?
Black licorice, yeah.
So I'll leave you guys all off with a Halloween dad joke. Where do ghosts go on vacation?
Where?
Malibu.
Oh,
Malibu.
oh, that's terrible.
Happy
All right.
Halloween, everybody. Be safe out there. Enjoy.
Thanks, Brian.
Very good. Just we got came into the open here. Let's get a little bit of a rundown here. December corn down 4.27 1/4. November beans are down 1 1/4 at 10.90, and December Chicago wheat is down 5 3/4 at 5.18 1/2. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. I hope everybody has a great Halloween, and we look forward to talking to you again next week.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.